Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode of ESG Talks, Jason Roche joins us from the Central Bank of Ireland. Jason, who heads up the team within the Digital Euro unit at the Central Bank of Ireland, will be discussing the digital landscape in the Euro area and specifically the ECB's new digital euro. When introduced, the digital euro will impact everything from banking to liquidity to cybersecurity, and essentially will impact how we pay for things. The digital euro represents an exciting new dynamic for the marketplace, and we are pleased to bring you a conversation on the latest new technology. Hi, everyone. This is Arianne Schreier from KBRA's ESG team. Thank you for joining me today, Jason, as we discuss the digital landscape in Europe and how significant changes that will be implemented in the coming years will enhance digital security and improve existing market infrastructure. Cyber risk and enhanced market resiliency will be key themes for us today, but the digital euro will have wider implications, including potential impacts on credit analysis. To really flesh out these implications, we will discuss how banking, liquidity, investment, and security will be affected by the digital euro's introduction. To give a little bit of context before we jump in, broadly speaking, cybersecurity and the digital framework have come into focus in recent years and now really represent a live risk, possibly the biggest immediate ESG risk, to financial institutions and the wider market across Europe. Because of this development, ESMA is introducing changes to its union strategic supervisory priorities to focus on cyber risk and digital resilience alongside ESG disclosures. The Basel Committee has also amended its standards for banks' exposure to digital assets like cryptocurrencies. So it's easy to see how the picture is moving fast and evolving in real time. Basel says that under their amended proposals, banks would also be required to perform due diligence to ensure that they have an adequate understanding of the stabilization mechanisms of stablecoins to which they are exposed and how effective those mechanisms are at reducing risk. And given the increasing level of cyber attacks companies face, the digital framework of these currencies is ever so important. Just to highlight one example, the US Treasury was recently hacked in what the department called a major incident. Needless to say, the digital euro is a really exciting development, and we are delighted to have Jason here at the forefront of this new technology to discuss. So, with that said, Jason, do you mind introducing yourself and telling us about your work at the Central Bank of Ireland and the wider euro system?
Sure. Thanks, Ariane. It's a pleasure to speak with you today, and thanks for having me on. My name is Jason Roche, and I'm a member of the Digital Euro Unit at the Central Bank of Ireland. The Digital Euro Unit supports the ongoing preparatory work, which is being led by the ECB in conjunction with Euro area national central banks, exploring the possibility of a potential future issuance of a central bank digital currency known as the digital euro. The overarching objective is to design an appropriate digital means of payment with the necessary design features that meet the needs of and provide citizens and businesses with more choice and convenience in how they pay. The digital euro would be a single means of payment usable throughout the entire euro area, with users able to pay anytime. Regardless of where payers are located or which commercial bank or payment service provider they use, digital euro payments could be sent and received instantly 24/7, 365 days a year. So, as part of the current ECB preparation phase, the Eurosystem is working to lay the foundations for the potential future issuance of a digital euro, should a decision be taken. This work includes selecting service providers that could provide a robust digital euro platform and infrastructure, learning through experimentation and conducting further analysis on digital euro design aspects and functionalities, and progressing the development of the digital euro scheme rulebook in close collaboration with market stakeholders. The rulebook would define a single set of rules, standards, and procedures to ensure a harmonious digital euro implementation right across the euro area. And in doing so, it would provide greater clarity to payment service providers and merchants on how the digital euro could impact them and their relevant business models. Turning nationally, our work is primarily focused on positively influencing awareness through active engagement with our stakeholders. And as part of the current phase, we're striving to inform, listen, and build public dialogue, communicating the potential benefits and indeed discussing some of the challenges for Irish market participants, businesses, and citizens in order to shape national readiness and pave the way for a potential successful launch in Ireland.
Great. Thanks again, Jason, for joining us today. So, what exactly is the digital euro? To someone less familiar with the topic, it might be easy to think that the digital euro is the same as cryptocurrency, but as I understand it, they are in fact different. Similarly, this could raise some questions around the difference between the ECB's coin and, say, a Federal Reserve coin. Could you talk about the differences between the digital euro and other digital currencies that exist?
Most economies are witnessing payments undergo a fundamental change driven by the digital revolution and its impact on the demand for new forms of payment and the provision of innovative payment services. Central banks are a key stakeholder in the digital transition of payments, and the euro system is adapting to ensure that payments remain resilient, efficient, and inclusive, integrating the latest leading edge technologies that have emerged. A digital euro would be a universally accepted digital means of payment that consumers could use free of charge in shops, online, or from person to person, and it would be available both online and offline. It will be built on best in class privacy measures, ensuring the highest possible protection of privacy and promoting digital financial inclusion by ensuring no one is left behind. Crucially, a digital euro would complement, not replace cash, and strive to replicate cash like features insofar as possible, such as pan European reach, issued and backed by the central bank, accessible and accepted everywhere across the euro area. Basic digital euro services will be free regardless of who your payment service provider is. You could avail of instant settlement in public money, even extending to places cash cannot, such as online purchases, and avail offline, a highly innovative feature that replicates the true anonymity of cash. No digital payment means currently offers all these benefits across all payment scenarios today. Looking to cryptocurrencies, my view is that these are very much speculative assets rather than money. Their value tends to fluctuate quite significantly. They are not widely accepted as a means of payment. For example, I cannot pay in my local coffee shop with any cryptocurrency that I know of. And often their exchange into Euro cash or even commercial bank money is not guaranteed. In stark contrast, the European Central Bank would guarantee that a digital euro is safe, widely accepted, and keeps a stable value, and that it can be exchanged at face value for euro cash at any time. Regarding the progression of other jurisdictions in relation to CBDC exploration and development, a very high percentage of central banks right across the globe are at various stages. Each will have different motivations and may pursue different design features and policies, resulting in very diverse approaches. At this time, the ECB's work on digital euro is focused on a successful launch in the euro area. This would be a precondition for any potential successful use outside the euro area. Once successfully implemented, interoperability with other CBDCs could be a desirable functionality for the digital euro down the road. But there is no doubt that extensive international coordination with other central banks will be needed to ensure this is a success.
That definitely helps to clear up some potential confusion as we move forward. I'm curious though, are we not digital already? Anecdotally, it's rare for me to carry cash anymore. All of my money is effectively virtual, shooting back and forth between banks in seconds as I make and receive payments. So I'm just wondering, is this really needed?
Yeah, that's a good question, Ariane. The reality is that across the EU today, digital payments are not as convenient, efficient, or as cost effective as they could be, resulting in operational complexities for payment service providers and ultimately higher costs for merchants and consumers. The Eurosystem's motivations for exploring the possibility of issuing a digital euro are fortified by a few main reasons. So, firstly, there is an emerging need to respond to evolving payment trends, reflecting people's increasing preference for digital payments. So, against that backdrop, from a retail payments perspective, public money, the euro, cash, banknotes, and coins, has remained in its physical form since inception. There is a need to ensure that citizens have continued access to public money for payments, which is accessible and accepted everywhere in the euro area. The European payments landscape today is fragmented. Not every member state operates their own national payment scheme. So, for those that do, these tend to work quite well nationally, but face challenges scaling cross border, for example. Those that do not operate their own national schemes tend to rely on international providers for digital payments, and these providers have gained dominance in the European payments market. Strengthening Europe's resiliency geopolitically, as we've seen, global tensions remain quite elevated, Payments ensure the seamless functioning of our economy. So, as central banks, we have an obligation to ensure our payment system is secure, resilient, and meets the needs of Europeans both now and into the future. Preserving Europe's strategic autonomy is more important than ever.
Next, I'd like to ask about the market. Could you explain how this new central bank digital currency will impact the current market infrastructure and environment? And maybe highlight what changes it will bring, and alongside any general changes, what are the anticipated improvements?
So, impacts to the current market infrastructure and wider European payments landscape will ultimately depend on the final design and the outcome of the ongoing legislative deliberations. So, looking to some immediate standout benefits from a European consumer perspective, consumers will be able to make all of their daily payments, including from person to person, in physical stores and e commerce in all Euro area countries using one single solution with basic digital Euro services provided for free. Additionally, there would be the possibility to pay digitally even without access to the internet. The digital euro could be used to send money for payments even in the absence of an internet connection. If you are physically close to the other party of the transaction, for example, whether this is another person or in a shop. The digital euro offline mode would provide consumers, businesses, and public entities with the ability to make and receive payments even in remote areas with unreliable internet connection, and in the case a shortage of communication networks or power infrastructures materialized. European merchants will be able to expand their customer reach and reduce their costs. Thanks to the digital euro, they would have more leverage power vis a vis non EU providers that charge them expensive fees to accept and make payments today. European payment service providers will gain free access to the digital euro pan European infrastructure and harmonized payment standards, allowing them to further expand their portfolio and customer reach. And this could potentially lead to new business streams. Furthermore, they could benefit from transactions that have similar revenue as other means of payment, but without the associated scheme and processing fees that other schemes charge.
Building on that and getting into some more specifics, how will the ECB's digital euro impact the banking system and liquidity? For example, do we earn interest for holding digital euro?
Sure. So the euro system is very much committed to designing and implementing a digital euro that avoids undue risks to the financial sector. Public private cooperation is crucial in the digital euro environment, and private sector payment service providers, including the commercial banks, will play a key role in the distribution of the digital euro. Digital euro customers would gain access through their normal banking service providers, who will be responsible for managing customer onboarding, for example, as well as day to day customer services. Payment service providers will be compensated for their role in the distribution, as is the case today for comparable digital means of payment. Monetary and financial stability safeguards are considered and embedded in the digital euro design. These are also foreseen in the European Commission's draft regulation proposal. The holding limit, which is the amount of digital euros an individual is permitted to hold at any given time, is a key, though not the only, design feature to mitigate the digital euro's impact on bank intermediation. It is important to note that in terms of usability, the holding limit doesn't get in the way of making and receiving larger payments. People can link their digital euro account to the commercial account, allowing funds to flow to and from it to their digital euro account as necessary. If, for example, someone wants to make a digital euro payment that is higher than the holding limit, they can still pay with digital euro. Once the payment is initiated, funds can flow from their current account into their digital euro account to make that payment. And as is the case with cash, remuneration for digital euros will be zero. Given it is designed as a means of payment and not a store of value, interest will not be paid on any digital euro holdings.
I'd like to switch gears a bit and talk about security and market risk. How will the digital euro enhance the resiliency and safety of the marketplace and for market participants like financial institutions? Do you think these changes dampen cyber risk, and what are the implications of personal privacy and security?
The assurance of a reliable digital payment system that functions seamlessly across the euro area, even in critical situations, is invaluable. A digital euro would strengthen the European payments industry by increasing competition and resilience. It would ensure that there is a pan European payment solution for the euro area under European governance, and it would rely on its own infrastructure, reducing our dependence on a few dominant providers. It would facilitate more choice in the European retail payments market, broadening the options available, allowing citizens to pay with digital central bank money. Crucially, It would coexist and complement well-functioning alternatives that we know and are familiar with today, like cash and other private sector solutions. The offline digital euro, as we've already discussed, would provide a robust backup in critical situations like internet outages or in remote locations with limited connectivity, ensuring that payments are uninterrupted and therefore more resilient. From a privacy perspective, intermediaries would only see the user information needed for onboarding and compliance with existing regulation, such as anti-money laundering and countering the financing of terrorism. The euro system would not be able to see the personal data of digital euro users or link payment information or patterns to individuals. The digital euro therefore would achieve a cash-like level of privacy for offline proximity payments.
Let's talk about next steps. Has this been legislated by the European Parliament? And if so, do we have a timeline for implementation? And to piggyback off of that question, is there any anticipated time frame for when this will become a legal tender?
Not yet. The political debate amongst the co-legislators, so the Council and the European Parliament, is live and evolving as we speak, with the scope and final design of a digital euro ultimately dependent on the outcome of those deliberations. The basis for those discussions is the European Commission's draft regulation, which was proposed in June 2023. And that proposal laid down the necessary legislative framework for establishing a digital euro across a number of areas as it relates to, as you've rightly pointed out, Ariane, legal tender status, putting a digital euro on par with cash. Others include privacy, anti money laundering, distribution, digital euro use, and other essential technical features. Only after the regulation is adopted by the co-legislators, the Governing Council of the European Central Bank may decide to proceed with the issuance of a digital euro.
Finally, what are any obstacles to rolling this out? Are they mostly technical in nature? Is there any political opposition? Or would you say this process is independent of politics?
There's much done, but more to do, certainly. The proposal by the Commission is currently being debated, and a key dependency for the rollout of a digital euro in the future will be the successful adoption by both the European Parliament and the Council. The euro system will consider any necessary adjustments to the design of the digital euro that may emerge from these legislative deliberations. The euro system has made significant progress in its work to date since the launch of the 2 year investigation phase, which commenced in 2021, and it continues to advance its work and achieve its objectives set out as part of the current preparation phase. In parallel with the legislative process, the Eurosystem is continuing to carry out extensive analysis, testing, experimentation, and stakeholder engagement to ensure the digital euro meets the highest standards of quality, security, and usability for its citizens.
Thank you to Jason for an enlightening discussion on such an important topic. This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG-related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.